welcome Christie Ju. She is head of Hong Kong and China research at Jefferies. Well, we just saw that inflation number come out. Slightly stronger than expected, 6.5%. What's the signal you're getting from that?
I think obviously we are still waiting to see the inflation numbers start to peaking, and it should come down gradually, given that we see the oil price is taking quite a breather. Also, of course, a big chunk of the inflation in China is the hog price. My teammates, Jesse, just hosted an expert call with expert in the hog prices, and the expectation is it probably will start coming down in the fourth quarter.
Yeah, you see the producer price number as well. That was 7.5%. That is an indication of future inflation, so that shows that it could be slightly stronger and hotter, I should say, for a bit longer than some people had been thinking before.
Yes, that's very much a possibility. I think, in a historic moment like this, we see a lot of deleveraging happening and a lot of global financial, this is like yesterday was the worst hit in the history since 2008. So a lot of things are changing. I think a lot of indications we will still need to see more clarities. But with that in mind, I think if we can step back and take a bigger picture or longer term perspective, I would say we believe the long term global allocation for China assets will continue to increase. On a fundamental basis, Chinese economy is still very strong. I think 7 to 8% GDP growth and increasing domestic consumption will support the share price. From our perspective, we are recommending investors to get into certain sectors, namely Macau gaming. We like Galaxy and Wing. We like China consumers. I mentioned that earlier. But Mengniu and Yuren, we like them quite a bit. And then China Telecom, we like China Unicom, as well as Baidu. And then I cover China property side. I think.
So you think the property market is going to be all right? I mean, I noticed that Glorious Property is one of your underperformers.
Yes. On a bigger picture, again, interesting enough, when global there are turmoils, it's probably not a bad thing for China properties. That means Chinese government may start to take a little bit more closer look before another round of tightening. I think over the weekend we also see some positive data coming showing that social housing, for instance, the social housing starts is picking up, and that will also solve a big headache for Chinese government. With that in mind, I would not be surprised that in terms of tightening pace, maybe slow down a little bit and people will take a closer look. And our channel checks and our property tours confirm that fundamental demand for the Tier 2, Tier 3 cities on the residential side is still quite strong.
So that's why you have a hold on Tianjin development?
Well, we like, on the residential side, we like Coley and Evergrande. They are the big players in terms of our volume growth. And Vanke, of course, just reported quite solid earnings yesterday. I'll come back to your story about Glorious. It was one of the stock we recommend to avoid. In the uncertainty market like this, we think a flight to quality is a good thing to do. We will recommend investors to stick to the blue chip names with a proven track record.
Christie Ju, very quickly, you mentioned just a short while ago a historic moment. Why do you use that word?
Well, interesting enough, this is the first time we see a downgrade for the U.S. credit. I think many people in this part of the world, China being one of the biggest creditor of that, people are always concerned about whether or not the government will be able to pay. Obviously the jury is still out, but with the downgrade, it's a very significant signal. I think Chinese government is taking a close look, and all of us, we are a student of the market. We are learning what that means to global economy and emerging market, and China in particular.
Christie, thank you very much indeed. Christie Ju there from Jefferies.